The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 26th wonderful Wednesday edition of today's opening call on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools to make it a little bit easier so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool, folks, that I call There Is No Limit to Your Universe. Think about that. Think about that just for a moment. There is no limit to your universe. Is that your belief system? You know, perhaps said another way, there are more possibilities in the universe than anyone can possibly imagine. So let me ask you that question. Is this your belief system? It's mine for sure, but think about the difficulties that each of us have to overcome in order to believe that there's no limit to our universe out there. I mean, from the very moment that we're born, we're taught about what? We're taught about limitations. We're taught about boundaries. We're taught about restrictions out there. Think about it like this. Each of you that own a home out there, that you're in a home, I bet you the majority of you've got a fence around your home, don't you? Right? That's a boundary line. I mean, that's what we see as a child. That's what you see out there. You see a road, you know, you can't cross the road. Look, I realize some of these things are safety constraints, but, you know, there are these little subtleties out there that often will actually stop you from being able to forge right through and realize that the universe is just wide open and that there is no limitation to your universe. But understand there are some things that get in the way, things that you don't necessarily even understand, that have just simply been ingrained in your soul since you were a little childhood. You know, you've got speed limits each of us drive. Some of us pay attention to them. Some of us, you know, like myself, say, oh, I can get away with 9, maybe 14 miles over the speed limit, especially if I'm on an expressway out there. And after all, I mean, the car goes much, much faster than that speed limit sign. And so you've got speed limits that'll slow you down. And oftentimes, you know, people believe that our endurance is limited out there. But of course, we all know that none of that is true. It's all BS. It is all before Steve. You know, every 4 years, folks, and we do, I believe, on Fridays now, maybe it's Mondays and Fridays even. No, it's Mondays. We do the Olympic theme. And every 4 years, well, it's really every 2 years, right? You have the winter, then the summer, and so forth. But in essence, every couple of years, you've got the Olympics out there. And what happens? We see those boundaries get busted all the time. Always new records out there. Your endurance is just simply amazing out there. Now, here's the trick to being able to bust through those boundaries, all those barriers out there, and you want to maybe write this down. It's just a few words out there. Life is consciousness, folks. Life is consciousness. And what I mean by this, folks, is that if we are focusing in on our limitations in our life, then that's the way it will be. Do you want to focus on your limitations? Absolutely not. And so, folks, Albert Einstein, you know, we're going to talk about the markets here. We're going to talk about his theory of relativity, right? What goes up must come down. He's the reason that the market fell yesterday out there. Nobody's talking about that. However, he also wrote the most beautiful, most profound emotions, folks, we can experience in the sensation of the mystical. For me, folks, what that means is that our minds are filled with ideas and thoughts that show us how to build or create the things our imagination can conceive out there. Make sure that you open up your mind and that you've got an amazing imagination, folks. There is no limit to your universe, folks. Go out there and create what I like to call an extraordinary life. Now, in the universe of the markets, let's get to it out here right now. We've got the Dow futures trading off about 15. The mini S&P futures down about 3 points out here, trade out at 14.34 and a quarter. NASDAQ futures off 7 out at 27.95. Russell 2000 futures basically flat out there. King dollar up 35 cents right now, trading out at 79.96. Gold finally starting to pull back here. It's off 15 bucks thus far this morning at 17.50. Silver only back 18 cents. something to think about. That is down about 0.5%. Gold down basically about almost a full percentage point out there. If we take a look around the world, we handed off a load of bricks last night to the markets, and of course it's being blamed on all kinds of things out there. It's the unrest in Greece. They're protesting over there. They're protesting in Spain. The Middle East is on fire, and what else is new out there? If we do take a look at the markets around the world, over in Asia last night, we didn't do. Of course, they've got problems over in the islands between Japan and China. Problems everywhere. You got to live and love, folks. And if we take a look at the Nikkei, down 2% last night, 184 points. You had the Shanghai trade down a little over 1%. That was down 26 points. That's on its way to make a new A to B equals CD down, or actually probably more like a 1.618 butterfly expansion pattern out there. The Hang Seng off 171 points last night, 0.8% over in Spain. They're not enjoying the party this morning. They're down 3% off $267. Our call-in number, 877-927-6648. And so you say, Steve-O, where is this market going? You said you were a bull. I am a bull, an absolute bull out there, folks. Until certain levels get taken out here, we are in a market that is trending up. We were expecting the market to either move sideways or pull back to work off the overbought situation. Now it's kind of in a short-term oversold situation. If we take a look at the ES Mini, though, let's go take a look at the 30-minute chart out there. There's a number of patterns that we can take a look at. We're going to take a look at those A to B equals CD patterns that we're talking about, folks. So just taking a look at as I pull this chart back here, and you can do it on any chart that you trade. We're going to take a look at where you've got your major intersections. The ES Mini, the A point on this now, and we're going to take a look at two A to B equals CDs that are out there because they're both completing here. Your A point being at the 10:30 time frame on September 14th, the high out there, 1468. That's your A point. Your B point out here is as the ES Mini travels down into the price point at about 10 o'clock in the morning on September the 20th, gets down to a low 1443.50. Then what's it do? It does I think it's about a 0.618 retracement. Let's go from our A to our B. Let's use that retracement ruler. No, it's a 0.786, and it's a dandy, folks, because the 0.786 retracement of that A to B move, 1462.75, and what did it actually get up to? It got up to 1462.25. Oh, man, you got to love that. I do. So that becomes our C point. Now when you start taking a look at a 1-to-1 A to B equals CD, that would have completed at 1437. If you take a look at where the ES Mini closed at last night at 4 o'clock, as you were coming into the 4 o'clock close, I should say, it got down to the closed at 1435.75 during that half-hour session out there. That was actually completing a 1 to 1.272 A to B equals CD. But now what you've got to be paying attention, so that's the first one. That's the larger one. That is out there. I apologize. The 1-to-1 on that was 1437. The 1 to 1.272 is 1431 out there. Got carried away with my lines. Now, that's the set of black lines that you're taking a look at. If you are watching us on Tiger TV, and I want to give a quick shout out to Mike in Polk County, sent me a nice email. He listens to us on tfnn.mobi, just like many of you do out there. And all of you folks can catch the archives of this show on Channel 9. That way you can take a look at, if you're listening in on the charts. I know Mike wanted me to look at the SLV form, so I'm going to do that. We'll switch over to silver here in just a few minutes, and we'll take a look at that chart. He's a longer-term trader, so we'll take a look at the longer-term charts on silver. But let's get back here to the ES Mini. We're talking about two A to B equals CD patterns that are out there. So we've got the larger one. There's also a smaller A to B equals CD pattern. That's going to start off at that C point. That's going to start off at the high on September 21st, out at that 1462 area. That becomes your A point. Your B point is down here at about 6 in the morning on September the 24th, out at the 1444 level. If we take a look at that retracement, let's go from the high to the low out there. What we're going to see is the 0.618 would have been 1455, and the ES Mini gets up to 1456. So that's a normal retracement out there. Of course, what you got to pay attention to really on both of these A to B equals CD patterns is what? You got to pay attention to the 70, where the market does 75% of the workforce. Now we just have to become a master of that remaining 25%. That is that C to D leg. Look at how price is moving off of the C point here on the smaller A to B equals CD. It is still traveling along the strong side. That is the inside of that price projection. And on the larger one, you most certainly have price moving on the inside as well. What do I expect today, folks? I expect to see a bounce in the marketplace. May not happen right at the open, but I do expect to see a bounce out here. All kinds of indicators suggesting that. One of those being Richard Arm's Trin Index out there, closing yesterday at a level of 3.06 on the New York Stock Exchange. And folks, when the trend closes above 2, it usually, so, we're talking probabilities here. The probability is on the next trading session that you are going to see a bounce. The question is it going to take back all that fear that we saw in the VIX yesterday? The VIX having the largest move of any index out there yesterday, up a whopping 9%, up 1.28 points out there, folks. The correlation of that to be up 9%, the ES Mini should have been down 2% yesterday. Something to think about. 877-927-6648. Give us a call, folks. I would love to hear from you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's see, you got Dow futures off about 10 this morning here. You got the Russell 2000 just getting slightly green, up really 50 cents out here. Not a big deal, but let's go over and take a look at the daily chart. Then we'll go switch back to silver for our man Mike in Polk County, who's listening to us on TFNN.mobi. As we switch over and take a look at the Russell 2000 futures chart, you can see, down hard yesterday, coming into the what I call the QE3 date. Now, when I take a look at the QE3, and I'll go ahead and put up the weekly chart on the screen of the S&P, what I take a look at is the low of the week, not the low of the QE3 session, which was on September the 13th. And I repeat Uncle Ben's words out there where he said exactly these specific words: the tools we have involve affecting financial asset prices. Those are the tools of monetary policy. To the extent that home prices begin to rise, which we certainly know they did yesterday, folks. And if you haven't had a chance to go to the homepage of TFNN.com to download the bull market in Florida housing, the special white paper, the special report that Tom did, please do so. It's full of, chock full of information out there, and it's a report that you absolutely want to have. And then you might even have some interest in taking some of your retirement assets if you are qualified an investor and investing in a weak asset out there. Why? Uncle Ben is telling you what he's doing out here. You want to be able to do that. So he said to the extent that home prices begin to rise, the consumer will feel wealthier. We know that's true. They will be more disposed to spend. And we're coming into the holiday season, folks. You think he wants you to spend now? Absolutely. If stock prices are rising, people may be more willing to buy homes because they will think they will be able to make a better return on this purchase. Those are Uncle Ben's words out there. I agree with him. So house prices is one vehicle. Stock prices, he says, folks, as many people own stocks directly or indirectly. An issue here is whether or not improving asset prices will generally make people more willing to spend. One of the main concerns that firms have is that there is not enough demand. There's not enough people demanding their product. We know that there aren't enough folks in the store out there. We take a look at supply and demand, folks. Of course, I just ad-libbed there. And but what he does want is he wants people to feel better. He wants their 401k plans to look better. And he wants homes to be worth more. That's Uncle Ben. That's the QE3. There's a lot of folks out there that want to fight him. I'm just not one of them, folks. No way. Not when I take a look at QE1 and QE2. Wrong the first time. And I wasn't really wrong the first time. I actually didn't buy in at QE1. I bought in on March the 6th, 2009. The market made a turn that following week out there. That was because I used a 1.272 butterfly expansion to get in on the market. So when I take a look at the Russell 2000 futures, folks, I'm taking a lolook at the lows on a weekly basis. That would, in essence, in the Russell 2000 futures, take out the 834.30 level. You're at 838.20. testing that area, as we've seen with other QEs on a weekly chart. Testing those areas has happened before, happened with QE2 out there. So for that to occur, no big shakes out there. Let's go over to silver, though, here. Let's take a look at it for Mike in Polk County. Now, Mike doesn't have access to the actual silver contract, and, you know, he does trade. He buys and sells 100-ounce bars, and we do have some 100-ounce bars of silver in stock here. If you're interested, you can call me at 866-618-8888 at Tiger Metals Exchange. And therefore, Mike, if you don't have access to the silver contract, and one way you can get access to it is by signing up for a free account at Nadex, which, by the way, this coming Saturday from 8:30 to noon is a free workshop. You might want to come over and check that out. Go to the homepage at tfnn.com and check out for all the details. That's here in Tampa at the Grand Hyatt. For Mike, that's about a 40-minute drive, maybe. You want to go ahead and take a look at the SLV. That's probably the best chart to look at. What Mike was looking at was he was looking at lower highs, and absolutely that is what he's seeing out here, and he was seeing some lower lows. And certainly if you take a look at the SLV, and you can see the SLV running right into what? A supply line on the weekly chart. The week of May 6th, the low out there was 33.58. You can see that last week, you made a little doji hitting that area. Silver is beginning to pull back here. I'd like to see it pull back further out there. I am long-term bullish on silver. What you want to be aware of, Mike, and I'll just try to put it. Let me go over to the, before I run out of time here, let me go ahead and run over to the actual silver chart out here. And yes, you were seeing some shorter term or lower highs out there, but what you want to pay attention to is really the trend line. Two things I say from a long-term standpoint. Take a look at this long-term trend. That was broken right back here in the middle of August, late August, and then you had what we'll call, folks, a crossover of the 50-day and the 200-day exponential moving average. That puts silver back in the long-term bullish camp. Look to buy a nice pullback in silver out there, folks. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow up 17 points. S&P's totally flat. Still in the gate, down 1 point now. Composite off 3. Russell 2000 not moving here just yet. Microsoft up 8 ticks. Intel up 13. Google up $6. That's the lead dog out there. That's the lead dog in the clubhouse. Right behind them, Biogen up $3 and change. It's up 2%. And InterDigital, IDCC in third place here. You've got Cisco down 5 pennies. Apple off $5 right now, trading out at $6.68. Leading the charge, on the way down is Apple off $5 and change. Right behind them, Salesforce Innovation off a couple of bucks there. CRM, Melanix Technologies getting hit a little bit this morning, down 2%, off about $3. Jabil Circuit, JBL, off 9% this morning. Deutsche Bank, DB, off 4%, and Fortinet, FTNT, off 6%. Again, our call number 877-927-6648. As we take a look at silver here, what do we take a look at? I just wanted to finish up the silver conversation out there. Now, if we take a look at just simple retracement levels, because I heard somebody say, hey, Steve, where could silver pull back to? Well, let's first take a look at the last move. And the last move up, because silver has not had much of a retracement. The last move up, I'm taking a look at the set of swing points from August. We're looking at a daily chart out here. And what we're looking at is August 30th, the low at $30.19, all the way to the high that was put in just a few trading sessions ago as silver got up to the $35.26 mark. If you take a retracement ruler and just take a look at that set of swing points, a small set of swing points, what silver has done is pulled back to where it should, the 0.382 level, $33.36. It actually got down intraday here. Oh, my goodness, how does that work? $33.36. That was the low. That was the first level out there. You know, folks, I love doing this. I absolutely do. You have no idea. And then what I actually love doing is just really showing you tools out there that you should have. Everybody needs this in your toolbox out there, your trading toolbox. You know, you need tools in order to be able to lead an inspired life, and then you need tools to be able to take a look at what's going on in the markets. That way you can turn off the noise. That includes me. You can turn me off as well, and then just simply go ahead and see what the markets are doing. So that first level on the much shorter term retracement level was hit this morning, $33.36. Now, if we take a look at a little bit longer term time frame, we go all the way down to the lows that were made on June the 29th out at 26.26 out there, all the way up to that high on September 21st. We use that same retracement ruler what you will see is the .382 level gets you to $31.82. Right now, at $31.30, that happens to be the 200-day exponential moving average. And at the .618 of that smaller leg that we were looking at is $32.19. I suspect that's really the range. That's what we'll see silver pull back into. That's the level of about $31.35, maybe up to $32.20. That is the range. And what you'd want to be looking at there, folks, you want to be looking at volume as silver pulls back there, and you'd want to wait and see some type of bullish candle configuration. Otherwise, silver certainly could pull back further. Gold could do the same thing. If we pull up the gold chart here right now, we take a look at gold's retracement. Let's look at the same levels. Let's come off of the low out there from August the 31st. That was a low of 1647, all the way up to the high that was put in a few trading sessions ago on September the 21st out there. You can see that the .382 level has not been hit thus far on a pullback in gold. 1749 is what it's trading at. 1735 is the .382 level. It's gotten down to 1741 out there. I suspect that what we'll see if we take a look at the longer, and now what you will see is the 200-day exponential moving average is right there at 1735. So, I know gold is oversold out there, and you could see, a nice big crack. As far as where that could crack all the way back to, well, if we go take a look at, if we go take a look at the larger retracement, that would be off of the low here that I would use, May 16th, when you had gold test the other low with volume all the way back in September. But let's take a look at the low of May 16th. 1526, all the way up to the high that was put in here on September 21st. And what you will see is a bunch of lines here on the screen. The .618 level will get you that back to 1627. 1699 would be just simply the larger retracement. That would be nothing more than a dead cat bounce. That would be a nice setup there. Gold trading at 1747. Maybe 1700 is where gold pulls back to. Of course, the same setup. That's the target range. I can find additional targets out there. What you want to be paying attention to is volume on any pullback, and you want to be taking a look at some type of bullish confirmation as the market decides to turn. If you don't have that, then you just simply want to be patient out there, just like I'm being patient here on the ES Minis before I go ahead and pull a trigger and play at least at a minimum a counter trend rally. Should have a good one here today, and it's all up to the U.S., and it's going to be all up to probably the currencies out there. So speaking of currencies, before we go take a look at individual stocks, let's go take a look at the King. Let's go see what the King is doing. We can see the King here trading out at 79.98. A really weak move when we take a look at the U.S. dollar index. When I say a weak move, I'm talking about just simply take a look at the retracement off of the August 28th level. You had the U.S. dollar index out at 81.84, a little swing point up there, all the way down to the low that was put in on the U.S. dollar index on September 14th. That level, 78.60, you can see today, just getting above the .382 level. Out there, I would have expected a little bit more of strength inside the U.S. dollar index as it was making its move. You can see even volume-wise, contract-wise, nothing to write home about. If we go take a look at the Queen, we go take a look at the Euro out here. The Euro headed down to the .382 retracement level and the neckline area, so it should find some pretty decent support here in that $1.27 range. It's at 1.28448 right now. That is on the Queen. And so just a normal dead cat bounce on this would take it to 1.27391, or right in that vicinity. If we go take a look at bonds, James Bond out here, then we'll go take a look at some of the markets overseas. You can see bonds here having how many? I think this is day 8. Let's go count them. Day 8 as an update, as an up day. So we got day 1, September 17th, 2, 3, 4, 5, 6, 7. Absolutely day 8 on the upside. Now let's go take a look at the downside. You had 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days down, 8 days up. Makes you think. And you can see that bonds now moving through the 0.618 level. If we take a look at some intraday charts out there, what we'll see there's some A to B equals CD patterns that the bonds are completing. Looks to me like they want to get up to 150, 100 out there. Perhaps they'll have a ninth straight up day before they make their turn. If we go back and take a look at bonds here, let's take a look at 1, 2, 3, 4, 5, 6, 7, 8, 9. So there were 9 days up. Starting off the swing point from August 21st into the highs, there were 9 days down, and we are in day 8 on the way up in bonds. Folks, just go take a look at the patterns that are out there. In this case here, this one is working on time. You got to love it out there. Let's go take a look at some of these stocks here that are popping and dropping. Let's go first start taking a look at Apple off $6. Let's go see what Apple is doing out here. Other than trading lower, give me a second here to pull that up on the screen here. Where is my Apple chart? I could just easily type in the symbol. Looks like that's what I've got to do. I'm sure somebody's sitting there saying, Steve, it's right in front of you. I'm sure it is. I just can't see it. AAPL. So now let's pull up the chart. Gapping down here this morning, trading out at 665.84. So let's go see what Apple is doing. It has got this little hammer candle right here. It's got one of Steve hammer candles. And folks, if you'd love to understand hammer candles and when a hammer is really disguised as something else, go to the homepage of TFNN.com. Under breaking news, you will see candlesticks, silent signals, the speed of trust. Special report that I've done. You absolutely want to make sure that you've got that in your toolbox out there. And what Apple is doing, trading into that hammer candle from September the 12th out there, had 25 million shares as it was moving down yesterday, 18 million shares. Apple's going to need a little more giddy up if it is going to really bust lower. Apple's got several areas here of support. Certainly, it's got a level below the hammer. So if the hammer does get taken out, you'd be looking at the April 10th high at 644, even Steven out there. But first, what Apple's got to do, it's trading inside the hammer. Typical buy on a hammer candle is right in about the 50% level of the wick out here. So if you're taking a look at what that level is, you do the math on it. I'm not going to do it. The low, I'll give you the numbers. Take the 666. Take the devil. That's the open. 666.85. Subtract the low, which was 656. Okay, so get that difference, divide it by 2, and subtract it from the first figure, the open 666.85. That would be where you would typically want to come in and buy a hammer candle. And then your stop here, it's very easy. Your stop is close below 656. You get a close below a hammer candle, and if you're long, you're wrong. In this case here, you get a close on Apple below 656. It says it's going to go down to 644. It's going to go down to the area of April the 10th out there. That's too much risk. You don't need to take that risk. You could take this type of risk if you were looking to be able to buy in on Apple. Now, what you'd also like to see is the hammer area, that midpoint, get tested. You'd like to see it come in with lighter volume. You have to be careful because you do have 2 gaps down here, and gaps are very important things on a chart out here. So that is on Apple. If we take a look at, I said there was, I believe it was Red Hat yesterday that we were looking at. That had a hammer candle. That was a chart that showed up on my screen out here. Maybe it was from yesterday or 2 days ago when we were looking at it. Today is Wednesday. So let's go take a look at another hammer candle out here, and it works like this all the time, folks. So make sure you go to the homepage of TFNN.com because sometimes those hammer candles are hiding in the bushes and they're really something else. So if we take a look at the September 24th hammer candle, this is on Red Hat. RHT is the ticker symbol. As I said, you get a close below it. If you are long, you are wrong. That certainly proved to be the point. In fact, during the trading session yesterday, we saw it try to get up in there and then start moving off. And that was the time to go ahead and close out your position. Now, the stock chart really doesn't look that bad to me as well. You had some decent volume, say 5 million shares coming out of it. But this thing is coming into an area where it broke out with 15 million shares. This is really not a bad-looking stock chart out here. You've just got to pick your points of entry And that's going to be somewhere, in the range of $54.55 all the way down to the level of about $49.51 on July 12th. That would be ideal. Now, let's go take a look at swing points here, because certainly a swing point was taken out on this equity yesterday. So let's go see if that swing point was taken out on volume. That will be helpful to us. So we're going to take a look. And the swing point we're looking at, folks, is the August 31st time frame, 1.3 million shares out there. So let's go take a look at the volume as it was passing that swing point here yesterday. Give me a moment here. Right there, and you did have volume. So you break a swing point, it says it wants to travel to the next swing point out here. That next swing point, well, you could almost argue that it's right below it on August 14th at 55.03. That had 1.9 million shares. I would say really where it wants to travel down to is right here, August the 2nd. Now let's just simply go take a look at retracement levels off of the low from July 12th. That was your 49.51 level all the way up to the high that was put in here. Let's take a look at the point sweet 618 level, really 0.786. So, a nice trade opportunity might be in red hat at about the 51.76 level. That's your swing point from August the 2nd. It's nice because you've got something you can benchmark it against. That is 1.1 million shares. That range is 51.95. That's the low, up to 54.39. That is on red hat. Not too bad of a looking chart out here. Isn't a consolidation, but it's a pretty nice range, 49 to 60 bucks out here. Let's go take a look at some of these other stocks here on the move, grooving to the upside as well as to the downside. Oh, you got American Greetings. Those guys are up again. I believe they were up before. Oh, they are going private out here. Okay, so that is the deal. They're up a nice 18%. So we'll skip that stock chart here. Let's go take a look at Biogen, leader in the clubhouse, dollar-wise on the way up. The ticker symbol there, folks, is BIIB. BIIB. Let's go see what she is doing here this morning, taking out some swing point highs. Looks like it's got some volume behind this move out here. The swing point that it's taking out, recent one, goes all the way back to the September 20th time frame. The high there, 156.57. That is the swing point high. Volume out there, 1.1 million shares. So far today, 305,000 shares. Market has only been open for 9 minutes. So this has got some volume behind the move. Let's pull this chart here back. Everybody at this party is having a good time. Let's put this on a weekly chart out here, making a big A to B equals CD up 877-927-6648. We've got the Dow trading down 11, S&P's off 5, Chipotle leading things to the downside, down $9 right now. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow trading off 2 points right now. S&P off 4. And stay tuned. Tom and I'll be up next doing the Money Masters show. And as we do on every wonderful Wednesday, we've got Basil Chapman up in Newton, Massachusetts from 11 to 12. 12 to 1, Larry Pesavento. And I know Larry's going to have a special guest on, or is supposed to have a special guest on today from 12 to 1. Then we've got Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien show from 4 to 6. So 9 hours of wonderful programming out there. Let's go take a look at what's going on inside the Dow here. You got about half of the stocks green, half of the stocks red out there. And as we take a look at what's popping and what's dropping, you got IBM leading the charge on the way up 50 cents. 3M right behind it, up 50 cents as well. Walmart up 38 cents. Boeing up 38 cents. Leading things to the downside, you've got Caterpillar down 46 cents. JP Morgan off 37. American Express off 39 cents right now. Let's take a look at IBM out here, trading out at 205.46. If we take a look at the A to B equals CD pattern, let's go see here what we've got. A couple things that you've got to be aware of as you take a look at this IBM chart out here. Number one, well, that wasn't a very good A to B equals CD, was it? If you were following along on Tiger TV, you probably got seasick there. At least I did. Now, to take a look at the B point out here. The B point we're looking at is August the 17th. The high is 202. Even Steven, one of Basil's round number highs out there. That B point being taken out with what? Let's go see if it was taken out with volume or not. I need to probably erase one of the other lines on the screen here. Might make it a little bit easier for you to follow along. Let's do this here. And so we can see it crosses the B point, does it with volume, confirms an A to B equals CD up. That B point still has not been penetrated on the pullback here. This says IBM wants to get to 212.36. That would just be the one-to-one A to B equals CD. But let's go take a look at this thing here. Let's take a look at the retracement of that B to C leg. And what level is that, folks? That's level number 1. That is your 0.382 level. When it moved back to 194.30 was the exact 0.382. It actually got down to 193.18. You got to love how these tools work. Prices traveling basically along the same leg here, saying that the strength inside the C to D leg here pretty much as strong as your A to B leg. Now, what is a little suspect out here is this high volume day. That was an options expiration, the 21st. So it was September 21st. You had 12 million shares. There is a whale in here, both a buyer and a seller. With price being below that area, it just says you got to be careful. When I say below the area, if you take a look at that September 21st level, the low is 205.92 and the high is 207.94. Bullish wise, you want to see it get above 207.94. Post haste, it's at 205.42 right now. That was on IBM. If we take a look at let's go take a look at J.P. Morgan, see what J.P. Morgan is doing out here. We don't need to look at Caterpillar necessarily, not that we couldn't. If we take a look at J.P. Morgan, gapping down this morning here, J.P. Morgan had completed a 1 to 1.272, A to B equals CD. Let me just refresh my chart here, make sure that I've got all of the right volume patterns out here. Let's see. Looks like we do. So it's gapping down this morning. J.P. Morgan, I would say if it's going to move down, it'll come back and it'll test the downdraft area that it's up and over, which was May 11th. 36.62 is a potential stop for J.P. Morgan as it continues to pull back. Stay tuned, folks. Tom and I will be up next. I absolutely enjoy being here with you. I hope that you're off to a wonderful Wednesday. If not, you should be. Just change it because, folks, there is no limit to your universe out there. Go out and create an extraordinary life. You deserve it. You earned it. You own it. Take care. I will see you in a few or see you tomorrow morning. Bye-bye now.